I'm curious, when it comes to GameStop and today AMC, is this run-up, this action that's happening in Reddit, is it good for the companies? Is it bad for the companies? Does it not matter either way?
Well, I would say this. One, it's bad for a statement on capital markets and how the financial markets are running in the U.S. Two, with respect to the individual companies, it's impossible not to be a great distraction, and they clearly have to focus on their business model and execute and let the stock take care of itself over time. So right now we have a situation that is basically untenable.
Is it kind of like ecology? If you look at an ecosystem, there can be an animal in there that you really don't like. You think it's a pest, but if you eliminate it, you tip the whole thing into an unstable state. And I'm thinking of short sellers as perhaps being that animal in the ecosystem that these Redditors are going after.
So I would say this, the way I look at what's transpiring, it's interesting to me. There's not this hue and outcry saying the system is broken, the system is wrong. And my theory of the case is right now you have two packs of wolves fighting each other, and you have basically the David pack of wolves beating the Goliath pack of wolves. That is retail investors winning against the professional hedge funds. But it's important for us to recognize that the SEC has a primary mandate for investor protection. So if the roles were reversed right now and you had the retail investors getting wiped out, clearly you'd have a large cry from media, from everybody saying the SEC, the markets haven't stepped up and protected these retail investors. So I think it's important for us to think about that in that context, right? It can end badly for retail investors, and we have regulators whose job is to protect retail investors. So steps have to be taken.
Bob, Adina Friedman on this morning talking about the quarter and obviously the benefit from all of this in their option trading volume. What is the role for the Nasdaq, for example, in all of this? When she talks about matching buying activity with social media chatter, what would that look like?
Well, I would say you'd start with the SEC is what is their role, right? I mean, they're the primary regulator of the securities markets. And when I think about what they can do, I first come up with the thought what they cannot, right? So they do not have the power of Jack Dorsey or Mark Zuckerberg. They cannot turn off these Reddit social media posts and basically ban them. That can't happen. And that's without getting into discussions with respect to free speech. But there are, in my mind, three things that the SEC should be doing right about now. One is it's unconscionable that you have the ability to have short interest greater than the shares outstanding. Now, we had tightened up the short selling rules years ago, but obviously not tight enough. So that has to stop. You have to locate a hard locate if you're going to be shorting a hard to borrow stock. You can never have a situation when you have 130, 140% of the shares outstanding. You've got to stop that. That will have some incremental benefit. The second thing is we put in place after the flash crash, limit up, limit down. And clearly that's been used here multiple times, but it has not been effective. So you need some amplification of the limit up, limit down capability. So it could be a timeout for a longer period of time than the short period of time you have now. The third thing you'll look at, again, under the SEC mandate, but still probably focused on the broker is, you have suitability standards, and these orders are coming into regulated entities, and you have to look at them and make sure they are, in fact, suitable and have some valid purpose to them. So I think those three steps doesn't solve the problem, but certainly takes it to a long way forward.
Shepard Smith here. Thanks for watching CNBC on YouTube.